Now, it's one of the fastest growing sectors, or as we term it, a real estate startup. Big interest from both institutions and HNIs to invest in it. Here's a quick lowdown on the growth graph of co-working spaces in India and why it's being keenly watched. Not just in India, globally, if you look at it, co-working spaces have taken off. Big reasons are, of course, the uncertain global operating environment, which essentially means that businesses have to be very nimble-footed, especially with game-changing technological disruptions. They have to make sure that they can adjust their business plans, and frequent business changes or operating model changes also has to ensure that they're nimble-footed. Now, this is what has brought in the need of flexi spaces, which has changed the very paradigm of office real estate, making it much more than real estate. Today, co-working spaces are an entire gamut of services. Reasons are not hard to find. It frees up capital. That's a big one. There's minimum fixed investment, so overheads go. It also gives businesses flexibility of scaling up, even scaling down in bad times. Cost savings of 20 to 25%, and of course, those unique amenities which traditional offices aren't still geared to provide. For example, sleeping pods and gaming zones, which absolutely are adored by young workforce. Let's look at some hard numbers of India growth story. Quite a fantastic journey. 30 centers in the country in 2010, now 350 players with about 500 shared workspaces. 80% of the new entrants or operators have entered the market in the last 12 months. That's JLL data. So it's literally taken off in the last 12 months. Together, they're expected to take about 7 to 9 million square feet on lease by 2020. Could exceed that number. We don't know. We'll find out. Where there's potential, international players are bound to enter. So we've got WeWork. We also have Regus and Spaces entering the India market with big capital. There are plenty of homegrown players, some armed with big developer muscle power. Coworks comes there. There's Office, there's Innovate, IndiCube, and SmartWorks. There are new entrants which are waiting in the queue. Look at the number: Collaborative, B-Station, there's Wolfpack, there's Work Matters, and Nextpace. So a huge number of co-working organizations all ready to grab their respective market shares. Is there room for all? Well, numbers indicate there could be. There's been a clear acceleration in the first half of 2018. The absorption in 2018 first half exceeds full year of 2017, 2.17 million square feet versus 1.87 million square feet. This is JLL research of the top 7 cities. But here too, the pie, of course, is concentrated in Mumbai, Bengaluru, and Delhi NCR. Mumbai tops with this number actually has been quite interesting and amazing for me as well. Tops with 19% of co-working space, if you take that as a percentage to total office leasing, which has happened in the first half of 2018. Bengaluru and Delhi NCR both touch a little more than 10%. We all tend to believe that co-working revolution was fired by startups. But if you look at the profile of occupiers, it's corporates and large enterprises which make up the biggest chunk, 40 to 45%. SMEs, individuals make up to 30 to 40%, and startups are still limited to about 15 to 20%. Global leaders, of course, are WeWork, but if I look at some of the big ones who managed to get investment in the last couple of months and a year as a whole, there's 91 Springboard. It's one of the earliest players. There's also Freakout, which have got money from Freakout. There's IndiCube, which has got money from the big ones like Westbridge, Creators, Gurukul, Corporate Edge. So lots of money flowing in from individual investors and big investors like Sequoia Capital. So how big is the game? Is it still the tip of the iceberg? How big could this pie be? And will there be 350 players, or is there room for all of them? Let's find out. Ramesh Nair, CEO, Country Head, JLL India, joins me. Karan Virvani, he's the Chief WeWork Executive Officer, WeWork India. We also have with us Ritesh Malik, Founder and CEO of Innovate, and Siddharth Menda, Founder and CEO of Coworks. So, competition very, very hot. Ritesh, my first question to you. You're here with me in the Delhi studio. Those two big boys who are sitting across in Bangalore come in with a lot of muscle power, a lot of developer backing, and of course, money as well. So how are you, the younger ones, with, let's say, starting out as entrepreneurs, matching up to that?
So I think when we started co-working in 2015, when we used to tell people that co-working is a concept where people start working together, and people used to ask us, why would people want to work together? So we've seen a massive shift, massive change in the absorption of co-working, and I think the market is so huge. It's the 1970s era of hotels, and you can see there's a Ginger, there's an Oyo, there's a Taj, there's a Lemon Tree. There will be market segmentation. There will be a lot of targeting of their own customers. And I feel the market is so huge. 350 players is nothing. You just talk about hotels. You have over 10,000 hotels in the entire country when it comes to the brands. So I feel the market is huge, and this is not even the tip of the iceberg. This is going to increase like hell. It's going to go almost 65% of commercial real estate will convert into co-working.
65% of commercial real estate.
In 2035.
Okay.
Yes.
That's not too far away,
Yes.
Ramesh. Now you should only be chasing these boys for business. I mean, what are you doing? Traditional office space. Here's Ritesh who's saying that co-working spaces are probably going to make up for 65% of total office space in India. You believe that number is reachable, doable?
Manisha, our estimate is globally, if you look at the overall commercial office space, that's 15 billion square feet. And out of this, 1/3, which is 5 billion square feet, would become flex space. And co-working is a part of flex space. I'm a corporate, let's say I convert my space into flexible space. That also becomes part of that. So we believe that number is going to be 5 billion. It's going to be 30% of the overall global piece of 15 billion. In India, 2 years back, the amount of co-working was nil. Late last year, we saw that become 4%. Middle of this year, we saw that become 10%. As of just September ending quarter, you've already seen that become 11.5%. So the future is definitely bright. We look at some of our large clients globally. Their portfolios are shrinking. A very large banking client of ours, their portfolio 5 years back used to be 110 million square feet. Now that's become 80 million square feet. Another large banking client of ours, which used to be 65 million square feet, that's become 45 million square feet. So that's a big trend. Companies are looking at reducing the space, increasing utilization rates. There's enough research which shows that globally most corporates don't utilize more than 50 to 60% space, and densification is definitely a company's priority. So these are some of the drivers which will drive. We are also seeing a new trend. Okay, we have the large players like WeWork, CoWorks, they're in the studio with us, but we are also seeing globally that large developers like Brookfield or an Ascendas or a Tishman Speyer, all of them are coming out with their own co-working products into the industry.
So I mean, we probably are going to see them in India very soon as well. Siddharth Mehta ready for that competition. I mean, 350 players. The biggest challenge must be for all of you, how do you differentiate yourselves?
You know, Ritesh said it right. He said there's going to be a lot of segmentation. Right now, the market, in spite of having 350 players, is relatively unorganized. But if you compare to the hospitality industry, where it's very clear what the definition of 5-star versus 4-star, and very clear what every single brand's value proposition is, that's going to start to come out as the market starts to get more organized. But according to me, if you look at India's workforce, we have over 700 million people in our workforce, the youngest country in the world. Right, all the dynamics are right for co-working, and if you ask me, it's going to be 100% of our workforce that's going to be addressed by co-working operators. That may not be through what we see in co-working today, but if you look at what we're doing in terms of our pitch to enterprises, we're operating and we're designing their offices. I know if you ask Karan, he's going to tell you that WeWork is aggressively going after enterprises. According to me, co-working is going to start playing that operator role, where co-working becomes the middleman, the operator that starts to run entire offices for large enterprises as well. And because of that, it's going to be 100% of the market that's going to be addressed by co-working operators.
Wow. Okay, honestly, that is a huge market disruption if that's the kind of number you're looking at, that 100% of the office market is going to be addressed by co-working operators. That's also actually nipping at the heels of large IPCs like JLL, because they are also, in some sense, office operators. Karan Girvani, you've come in or brought in one of the world's biggest co-working brand today, one of the most valuable ones as well. What are your own ambitions in India? Is it to be number one? Is it to, by revenues, market share? Because the market here is just evolving. It's fractured between smaller players who don't want scale, probably want to just carve out a niche for themselves. Give us some idea of where you want to go in India.
Sure. Well, thank you for having me first, Manisha. We, being a global player, have seen similar situations, not just in India, but in other markets as well, where there are a broad spectrum of players in different price points. The way that we actually look at the future of this business, as well as, the boundaries that we're pushing right now, we're not necessarily going to be boxed into this co-working sort of name and sort of term where it's only about shared spaces, and that you're only going to require sort of the buildings that we have right now. Like Siddharth mentioned, what we're seeing is lots of large enterprises also moving towards a more flexible way of working, but also just the environment that their employees actually want and want to work in is becoming a lot different. The needs of these millennial workforce, again, like Siddharth mentioned, which in India is about 700 million people, have completely different needs. Feel satisfied and fulfilled being at a workspace that is much more inspiring, that's much more uplifting, and has a completely different energy than what currently exists. And what we're seeing is, landlords across the world also sort of moving towards this and understanding that what's really important is what do the users of the space actually want, rather than, what's the cheapest to build. And as we progress and as this starts to mature a lot more, you're going to see that operators like us can actually partner with with large companies and run their offices and build that out, but also partner with landlords and actually help them reutilize their assets or create better utilization out of the spaces that they currently have, so that these spaces actually keep relevant for the next 50 years, rather than sort of dying out and becoming obsolete. If you look at some of the spaces and the way that spaces are fitted out right now, within the next 5 years those spaces would not be usable, and landlords would really need to figure out what to do with that.
That's interesting. And also what's interesting is the trend that co-working spaces are not just getting opened up in traditional office spaces or traditional office buildings. In fact, metro stations, hotels, and malls are now offering their unused space to co-working operators. Very interesting dynamics in the market. We'll come back and keep this conversation going. I also want to look at the investments now. You have a lot of HNI interest in co-working space. That's what makes it the real startup of the real estate sector. Let's find out what's the nature of the money flow which is going to come into this sector going forward. Young, nimble, aggressive, big boys are taking big bets with a new hot sector in real estate, which is co-working spaces. You've got WeWork, the global player, joining hands with the Embassy Group. You also have CoWorks, which is, of course, the RMZ Group from Bengaluru. And, of course, you have nimble, independent players like Innovate, nipping for a market share. In fact, shared workspaces are popping up in shopping malls, hotels, and even metro stations. But if I'm looking at the kind of investments which are coming in, it's a very interesting profile. You have a Westbridge Capital Partners, you also have a Sequoia, but you also have a group of individual investors who are making a beeline for this business. Ritesh, would you like to run us through, the kind of monies that have come in, the nature, who are your investors, and what is the kind of capital you will need for your expansion plans?
So for us, we've been very lucky to have people like Vijay Shekhar Sharma from Paytm, Rajan Anandan from Google, and we have almost over 100 angel investors. And that was a strategic call that we took, because the more the number of people that we have with us, the more are the opportunities in terms of actually hitting the network effects of actually getting the best real estate deals. And on the same end, we have Y Combinator, which is one of our largest investors, and they've actually helped us build the model from an asset heavy to an asset light model, where we do not need a lot of capital to scale scale, and most of our capex is actually debt capex on an operating lease model, and we just need the capital for security deposit down payments. So I think that sort of a model has actually helped us build our model into a very asset light model and helped us grow
so
on a very
are
small
there
equity.
geographies that you are going to target? How do you envisage your
our
expansion?
focus is what we do is we take grade A buildings, we take cotton mills, we take heritage properties. We've just signed up a heritage property with DDA. So we've seen in any property which has a significant location advantage, any property which has an advantage in terms of creating that vibe and making sure that the millennials would love working there. That is something that we are focusing on. Our tier 2 strategy is something that we have started working upon, and that is that we want to create a product which is value for money, and at the same time which actually creates that aspiration because tier 2 will be a huge
Tier 2
market.
is going to be a very different ballgame, because if I'm looking at the numbers given to me by JLL right now, the big action is amongst the top 7, and even in the top 7 it's the top 3.
Yes.
Karan Birwani, run us through the kind of capital you have committed to the expansion of WeWork in the next 2 to 3 years, and what's the game plan here in terms of being the market leader? You didn't answer that question earlier, but what's the end goal?
So the way that we look at it, we have in this last year signed up close to about 3 million square foot of space all over the country, and we'll have about over 20 locations open by the end of this year. And the idea for us next year is, to continue to expand in the cities that we're in. We're going into newer cities like Hyderabad, Pune, and Chennai towards the second half of next year. And the way that we look at it, we want to really go after this category and try to see how we can aggregate all types of real estate, not just co-working and shared spaces, but again, custom offices for enterprise companies as well as for mid-market and smaller companies as well. We really,
what about the
in terms of the
capital
required, like Ritesh said, we're all trying to move away from a capital heavy. Correct, right. We're all trying to move away from a capital intensive sort of business to as much asset light as possible. So we're really looking at our landlords as partners who are investing into our spaces, and we're actually able to give them a return on that money. So we're trying to limit the amount of capital we would have to bring into the business and see how we can bring partners on that actually ride with us.
Okay. Siddharth Mehta, you believe that there is steam in the market beyond the top 7 cities, tier 2, or is it too early to get into tier 2 cities?
So I definitely believe that tier 2 cities have some legs. There's definitely a market there. But I think the dynamics in every single micro market within tier 2 cities are very different than what we see in the top 6 cities in India. Obviously, if you look at absorption data, which JLL will be happy to give you, you're going to see that one of the larger drivers for absorption in the top 6 cities is obviously enterprises. But what's also quite surprising is if you look at the data, there's a lot of companies that have from 20 to 70 to 80 people, and that contributes to a large percentage of absorption in the top 6 cities as well. So what that means is essentially that in the top 6 cities, you have the ability to scale much faster. In micro markets, in each micro market, you have the ability to double down, do much larger locations, which gives you economies of scale. But what you're going to see is in tier 2 cities, it means you have much smaller locations. So for us, we're already in 5 cities today: Bangalore, Chennai, Mumbai, Delhi, NCR, and we're going to be in Hyderabad in January and Pune after that. But we do have plans to venture out not only to tier 2 cities in India, but we're looking at Europe and Southeast Asia as well.
Wow, so that would be probably the first homegrown brand going international in co-working spaces. Ramesh, Nair, just run us through whether you will see things like listing in this space. I mean, is it too early to start looking at it? Because look at the kind of valuations that startups have. This is really, honestly, the startup of real estate sector as well. Do you think that we will get to see, or you would advise some of these players to go for a listing?
Firstly, congrats to WeWork. Last night I saw an article which said that WeWork has been valued at $45 billion. So definitely the industry is going to get consolidated. Like we have 12,000 developers in India, but just around 40 of them are doing well in terms of commercial. We'll see the same trend in co-working. You mentioned that earlier, Manisha, there are 350 operators. I think the industry will get consolidated to around 10 players. And these are the people who are going to get those massive investments. Right now, over the next 2 years, I don't see a tier 2 play. Let me give you an example. If Pune today sees a 50 lakh square feet absorption, a city like Ahmedabad only sees a 5 lakh square feet absorption. So you're not going to see, or a city like Coimbatore today sees only a 4 lakh square feet absorption. So you're not going to see the big boys of co-working move into these cities. And the people who will actually end up getting these investments will also have to think hard. Sid talked about how there will be segmentation happening, the 5-star, 4-star, like we have in hotels. We believe that the future holds for players who can offer more customized solutions for their clients, people who can have more niche, like can we have a co-working just for artists? Can we have co-working just for coders? There will be a lot of recalibration of design which is going to happen. Today, thanks to Wi-Fi technology, you can find out that within a co-working space, which are the zones which are getting used more, and create more of those zones for the future. We have something called cohabitation catching up. Right now, companies share space, but in the future, can they share talent? Can they share resources? So I think the future holds, we are talking of convergence of multiple flex spaces. Ritesh spoke about that. How can we use a mall? How can we use a gallery? How can we use a hotel lobby? How can we use coffee shops? So how can we use museums? Internationally, these are some of the themes which are catching up. Convergence of all this, I think, would be the future, and the people who are able to do that, they would get investments. Definitely, I have seen a lot of family office interest. You spoke about that. In the last 3 months, I have met $3 billion plus family offices who have shown interest in investing into this industry.
Okay. What about the big players? I mean, we're talking about, at the start of the show, people like Brookfields also getting interested directly in setting up their own flexi working spaces, co-working spaces. Do you think they are already taking bets with other sectors in India, from warehousing to retail? Do you think that this is one other sector which they probably will attack next?
Some of them have entered India, Manisha, but it's only a matter of time. Again, look at the background of both Karan and Sid. Both of them come from developer backgrounds, some of the most respected names in the country. So I think it's only a matter of time before the other developers also come in. There would be institutional capital. You look at the top 10 developers in the country, all 10 office developers, all 10 today have an institutional partner. So capital availability will also be there for some of these large players to come in. Brookfield, Ascendas, Tishman all have big global presence in co-working. Definitely not as big as WeWork, but all of them understand this business, and they would also eventually enter and do reasonably well in the country.
All right, Ritesh, for us, a truly startup like yours, what is it? Is listing one of the future goals at all? I mean, how do your investors get that exit?
So for us, we've actually created a pool where now the investors who had invested at an earlier valuation, there is a lot of interest to buy their stocks. So there is a secondary market for investors to get their liquidity. Apart from that, I think for us the focus is that just focus on product. Make sure that your product is very customizable for the Indian millennial. And I think as long as we are able to do that, we will be able to make exit for our investors.
All right. Okay. Nobody is right now willing to say, or it's too early to talk about an IPO of co-working space in India. But Karan Virwani, Ritesh Malik, Siddharth Menda and Ramesh Nair, gentlemen, thank you very much for joining me. It is a hot sector, no doubt. Lots of excitement in this sector. And largely, if you look at real estate and the rest of real estate, especially residential, you need some new age sectors to grow and do well. It will, of course, depend also on economic growth and that job creation. So all the best to all the new players. And of course, we'll be back to see how many new deals pop up in the next 12 months. We'll keep a close track.